Hi everybody, this is Gary Dean and this is our nightly video report for Wednesday, August 17th, 2016. Saw a little bit of activity today, but I think this chart is really sums it up the best because we saw the S&P make it down to the 200-day moving average on a 60-minute chart, and that's where buyers stepped in. So it still hasn't closed that gap, which is it came close to it today, but it didn't. And we've seen that happen before, where it comes close to closing the gap, but it doesn't, and then finds some kind of support at a moving average, which if you looked at, it's kind of in the middle of this support zone. So it's not like it was out of the blue, but typically what happens because of the wave count that I've been showing you, where I believe that we are making some type of wave 5 here, and we made a new high, so this wave 5 can stick wherever it is. Now typically what happens is you form a 1, 2, you do 5 waves back up, and that will be the 5th of the 5th. So I'm not going to get too detailed into Elliott wave because I don't want to confuse you, but the fact that we've you can see 1, 2, 3, 4, 5, and then came down and came up, and we've been overlapping everything, is kind of leading me to believe that this 5 is already done, and from there we are going to get that anticipated drop that I believe is coming, and like I've been saying, it could start any day and make perfect sense. I did say that typically tops are a process, so at some point they're going to they're going to come up and at least test this high, or come down, maybe even close the gap at 2189. But typically what happens is if it fails to make a new high and then comes and takes this new low out, this is where you start seeing panic. So if we take this low out here, which will be now below the 200-day moving average, you have the 23% retracement at 2146. That's also this support. So this would be your next area to watch, and if it breaks through that, then you're going to get a reaction trade that's probably going to be panic selling something maybe in one day, where it comes down to the 2122 area or all the way down to the 2115. So these are the areas. The bears, if they push higher, we know where the line in the sand is for the bears. That's these previous highs. They don't want to be taken out, and if they do, they don't want to close above that. But it still is not going to make this chart any more bullish because we still haven't had any kind of reset from the overbought levels. And this buy area was just so I'm looking for the right word, anticipated maybe, that it's usually when you start just buying moving averages, it ends up the sucker's bet, and then you get the move up, and then from there it takes everything out. So right now the way that we're looking at it is the bears need to defend the 2194. The bulls need to defend the 2167, 68 area, and if it breaks, then we're going to get a reaction trade down to the 2146 would be the next stop, and then down to this 2120, 2110 area. So those are the areas that we want to watch. Now, again, if you look at just the rate of change and the bearish divergences and momentum, it really has not had a any kind of reset. We didn't even get to these lows here, and this is just a quick drop before it was up. So my case, even if it heads higher, all it's doing is just making this wave 5 over here, and it's really not going to. I don't believe that you're going to see a sustained breakout from here. I believe that this is very exhausted, and if we just look at the daily charts, the bearish divergences, very overbought levels, and we've just been kind of hovering at these levels for about a month now. It's not, right now, even if it pops up, it's probably going to get sold off, and we're heading down somewhere to the 2050, or if it follows the pattern, then we're going below 2000 and all the way down to the 1945, 1950 area. So 15-minute chart, you can see that we didn't even have bearish, bullish divergences on this, but yet it was just the moving average on the 60-minute chart that brought in the buyers. So again, this is kind of hinting that this low is going to be taken out. And if it does, typically you'd be looking for some type of bullish divergence. But the fact that you're probably going to get a panic trade down to the 2047, my guess is you're going to get even a more extended, move to the downside that's going to negate any kind of bullish divergences. So right now, like I said, if it rolls over and we start heading down hard, it would make perfect sense. If this was the hold right now and they got to head up, I'd keep an eye on this 2189 level and then obviously the 2094. And once we take out these lows here at the 2068 level, we should be very fast trade down to the 2146. So with that, let's see what plays out tomorrow and have a great night.